Hey traders, it is the 16th of April 2018. My name is Jameson. Hey, it's been a while. I have been posting some charts here on Litecoin because I find it interesting and fun, and I just want to share another observation. So I've kind of recently resumed posting some charts looking at Litecoin on a 30-minute time frame as it was showing some signs of accumulation, and it transitioned from accumulation to this nice little markup. This increased volatility through here usually is characteristic of some distribution. I'm a little biased that we're going to undergo some reaccumulation, but let's take a look what happened here. So I'm not going to go over the schematics and the labeling here for the Wyckoff schematic, but what we can see just briefly is that we do have this broadening base formation. We can see that you can barely see it. You can look at it on your own. And I say that because with the new volume they introduced here, the expansion kind of subdues and hides the volume that was here. But what we could see is that we had a lot of volume, climactic volume here on this down wave here. And then we kind of had this little dead cat bounce and this secondary test that was through here. It's kind of the stopping action of this down move. Now you can observe the character and the quantity of volume that kind of presented on these down tests. One, you can see that the down thrusts are shortening. The ability for bears to drive prices lower decreased. And if you were to look closer here and examine the volume, you would see that the amount of supply that presented on those down waves actually contracted. And then the volume kind of transitioned from an increase kind of climactic volume to kind of a dead period. So we saw a taper off of volume. This is generally characteristic of a transition from phase B to phase C in the Wyckoff accumulation schematic. And then as volatility returns, it should be the upside. And that's what we saw. We saw that prices kind of started to trade higher with increased ease of upward movement. You can see it presented here, here, and here, and the character at which that it broke down with a lot of sessions. So we have one big powerful session on a 30-minute aggregate period, and then we had, I don't know, like 20 of them. So it took 20 sessions to retrace this individual session. So that tells me that bulls are having a larger influence and that supply or bears are unable to overcome the supply, the demand that's here. And that's kind of what happened. So, and then additionally that not only did we increase the up thrust that's present, right? So we go from point A to point B, it's measurable there, and then we expand higher, then we expand higher, that kind of broadening formation. But what that shows is that we're trading higher with increased ease of upward movement, we're closing at highs, and it was on expanding volume. So that's what we see when we transition from accumulation, from kind of putting in a stopping action, broadening the space, to that of actually controlling the overhead supply. There's no more weak hands, and now we have strong hands and we rally. We transition from the accumulation to the actual markup, and then undergo some distribution or some reaccumulation. So now, in order to kind of maybe bring some clarity to this, we're going to change from the 30-minute time frame to the hourly time frame. And let's take a quick look. So first, we do have a retracement. So if I drew my retracement from the present lows from this terminal shakeout to the highs, that's going to define the boundaries of this retracement. We can observe that prices are attempting to hold on to the 38.2% retracement, and that tells me that bulls are resting, but at the present time they're still kind of maintaining control. So this is very bullish. If we had a 50% retracement, that's still technical strength that's there, but that shows me that kind of bulls and bears, that bulls are kind of tired, they need some deeper resting period, and that supply was able to drive prices a little bit lower. And then the 61.8%, if it was validated, if prices are testing that deeper pullback just suggests that bulls are a little bit more tired, and that supply was able to overcome demand with increased ease. So I do find it, my opinion is that the fact that we're holding this 38.2% retracement is some bullish technical strength. Now, here's the thing now, is that everybody now is looking at this highs. Everybody saw this bull flag that's presenting. Traders become predictable. So what happens is that prices break this level of resistance that's here. That stops out shorts. That stops out the weak hand shorts that are there. And then longs, breakout traders buy that. That creates some false demand, and that actually creates an environment of increased liquidity, so they can actually short this and push this down. And the reason they do that is they create this false demand and they push prices down to improve liquidity on the buy side. And I'm biased to the long side because of, I think that we're seeing a little trend reversal, but also I think we're seeing some the inability of shorts or supply to kind of violate this level of support. I think we're seeing some bullish reabsorption. So, again, back to this false demand here. Prices rally, we trap bulls, and then we we stop out the shorts. So there's buying the cover, there's buying chasing, and then prices reverse, it traps long. And then now when prices break this level, this angle of advance here, you're having long stop out of the trade. As we make a new low and we break out of here, we're stopping out more longs. And then if we break and we violate this area here, we're going to stop, more long. So I think what we're seeing is just, we're seeing some manipulation. The crypto markets aren't quite as liquid as some of the larger, public markets that we're used to. So they're trying to create some liquidity, and I think they're trying to create some liquidity on the accumulation side. This similar observation it's almost like a fractal pattern. I think we're going to see something similar. So I think what we're going to see is prices rally back up, retest this level of resistance here, maybe a little bit lower, and then shake back out. So what will happen is that prices will rally, bulls will chase that. Again, false demand. We may see when that rejects it, now we'll see a lot of shorts enter. Supply will break down through a low. We may see a washout of this 38.2 into this 50% retracement, because now we violate this level of support, or I speculate we violate this level of support. That's going to stop out a lot of longs, and that's going to cause a lot of breakout shorts to now sell that. So we have a lot of shorts, we have a lot of longs that are selling. So there's a lot of supply introduced in the market. We have some new shorts that are going to be chasing that. They're going to be selling. That's going to create some increased liquidity. We'll probably see a shakeout into this 50% or 61.8% retracement. So we're looking at key levels here at 123 to 120. That would create an opportunity for longs to have a lower risk entry and buy that. And I think that the action of doing so would create a terminal shakeout so that some larger traders can absorb that, and then we would break out of this bull flag. And I mentioned earlier that's fractal because it's almost the same thing that we saw here in the 30-minute time frame. So if we revisit this 30-minute time frame, you can see exactly that happen. And this happens over and over because traders, you can call them whales, right? That's what's referenced here recently here within the crypto industry. So that whales or the industry or banks, they manipulate this so that they can actually have some extra supply, and they don't know whether they're in control unless we continue to test support, test resistance, and they actually know that they're actually controlling the overhead supply. So that's what we saw here is that we have a breakout, a lot of people chase this, and then we break back down, we lose this bull flag, everyone stops out, they sell, we lose this level of support. Now shorts are entering, now these longs are getting scared, they're releasing supply, and then now this is all absorbed and tricked you, and this just kind of created an opportunity for increased liquidity. That's the terminal shakeout, and this reverses. I think this is a similar observation or fractal pattern that we're going to see here in the Wyckoff accumulation schematic that'll likely unfold here now in the hourly time frame. So again, I'm a little bit biased that we rally a little bit higher. I think that prices will then kind of be manipulated, pushed back down. If so, look for support here, 61.8, around 120.98, 121, and then 123. That may be a lower risk entry that would present here on the long side. So again, just my thoughts, certainly just my opinion. I hope you found that helpful. Good luck this week, and well, happy trading.